Hi, I'm Lawrence Linker. I've spent my career working at the intersection of finance, education, and technology, and I built XD Academy to be the learning platform that I wish had existed when I started in crypto 3 years ago. But what I found to be the most effective way to learn wasn't through reading books or articles, but by talking to friends that were smarter than me and had powerful wisdom and insights to share. So while we get the XD Academy's platform up and running, I want to bring some of these conversations to you directly by interviewing friends and colleagues that have great things to share. Hey, Sherry, how are you?
I'm good, Lawrence. Thanks for having me here. How are you doing?
I'm really well. So you were just at ETH Tokyo, right?
Yeah, so I was actually at both the Web3 festival in Hong Kong, hosted by Hashkey, as well as East Tokyo over the last 2 weeks. Just got back to Singapore a few days ago. Was a wonderful trip, but completely lost my voice from all the conversations I've had, but it was totally worthwhile.
All right. Well, you sound strong to me.
Thank you. Thank
So
you.
I'm really excited to talk to you today because, of course, I had that great conversation with you, Ivan, and Daniel. But after, I think we all had this feeling like, wow, we ran out of time so fast. And then I had the idea, like, let me bring you all back to do more of a deep dive on each of you. What brought you into crypto? What are you working on? What are your opinions? So on and so forth. So thank you so much for being back with me today.
Absolutely.
So Sherry, I thought I'm because I'm really into origin stories. So I thought I would start with your background because you have an interesting background. You were at Google, and then at some point you decided to join a accelerator program to work to become an entrepreneur. So maybe just talk to me a little bit about sort of that phase of your life.
Yeah, for sure. So as you mentioned, I started out my career at Google, and was actually first in Silicon Valley, working on strategy and ops for marketing, and then later transitioning to a team called Next Billion Users or emerging markets, in other words. And then eventually found myself in Singapore because I found it just a lot easier to work on emerging market problems if you're a lot closer to the end market that you are essentially working on. And so I came over to Singapore in 2018 to work on digital payments for India. At the time, the project was called TES, but it rebranded and actually became the Google Pay team globally. Um, my time at Google, especially on payments, was actually quite definitive to me because it was the first time that I really got to see firsthand how much technology really can drive financial inclusion. So during my time working on payments, it went from like essentially a new product to one that had over 100 million users across India in just a span of 3 years. And I remember one year I went to Bangalore in 2019 before the pandemic and saw that like every other vendor on the stretch, right, had from like your Kirana store owners to your juice wallahs, they had QR codes and they had Google Pay. And that was not there at all in 2016 or 2017. So it was remarkable how much that had changed in a short period of time because India was such a cash-based economy, and having payments there actually helped people move from cash straight to digital versus having that credit card era in between. And so when payments and digital payment technology had a real impact, you really saw adoption take off. Now, at the end of my time at Google, I would say I was ready for a little bit of a change. I mean, I, I got to work on something very interesting while I was there, but I also felt like the pace of innovation that we're going to have in fintech will always be hindered by the traditional infrastructure that it still relies on, right? As a fintech company, as a payments app, you're still an interface on top of existing banking infrastructure. If you're doing cross border, you're still working on top of things like Swift. And so there's going to be limitations around how much you can change and even the timing for making those types of changes. I also just wanted to be in a much more fast-paced environment. I think, one that just I guess gave me a little bit more energy. And so that's why I left Google in 2021. Joined an accelerator called Entrepreneur First here in Singapore. And that's where I actually met my co-founders, both very, very interesting and different backgrounds as well, which I think all kind of led to what eventually became Bluejay. One co-founder comes from a tech background, used to be in GovTech, which is the tech arm of the Singapore government. They are actually the ones that were responsible for all the tech initiatives during COVID, with all the like safe, I forgot what they're even called again, safety check-ins
Safe entry.
safe entry. It's good that I forgot because it's been a while since we lived there, but in that era, but safe entry. He also worked on putting educational credentials on Ethereum. So essentially did a lot of the blockchain related initiatives in the government. And then the other guy I met through EF as well actually comes from Myanmar, and he got into crypto because he had a centralized monetary entity that he did not trust, which at the time, if people, for those who don't know, was actually during the coup that was happening in Myanmar, where people were getting their bank accounts frozen, cash liquidity was drying up, people couldn't withdraw money from the ATM. Overnight, you might just basically lose all your life savings because you can't access them for whatever reason. If the government tags you as like a political criminal, like you can't get your money out. So all of these reasons really turned him to crypto as a necessity, right? That kind of decentralized money system, I think, really appealed to him because there was a centralized authority he felt like he could not trust. And of course, with my background, scaling out the tech side, I guess the consumer tech side of things when it came to payments, really, I think, came together for Bluejay. So I guess maybe for the listeners who are probably wondering what Bluejay is exactly and how this kind of links to the background. So Bluejay,
Yeah, go for it.
for sure. So Bluejay Finance is a stablecoin based platform that aims to connect on-chain or blockchain-based liquidity to real-world financing opportunities. So let me break that down a little bit. So stablecoins, as we discussed in the last podcast, is essentially a synthetic asset on the blockchain that's as usable as Ethereum or Bitcoin, but it holds a stable value that is pegged to something in the real world, like the US dollar or the Singapore dollar. And so stablecoins are a really good medium of exchange. If you want to do anything that resembles what feels like a traditional financial service, but is actually just being run infrastructurally on the blockchain. So it feels like you're investing in dollars or investing in Sing dollars or things like that. The platform part of what we do is actually our products that use the stable coins that we create. So we have a fixed income product called Bluejay Earn, which essentially is similar to, let's say, a brokerage account that you would open up with IBKR in Singapore or like Wealthfront or something in the US, where you can take your assets or your stable coins and invest them into various opportunities that give you a fixed yield over a period of time, which is a little bit different than variable yield or stock investing, where it's a lot more volatile what your returns are. But fixed income is if you're getting 5% APR, well, you're getting 5% times your principal over a year's period. So this is essentially a product that you can use within to figure out, or it's a product that can help you, add a portion of your investment portfolio to something that kind of grows, but does so in a steady way over time. The real world, stop me at any time, but maybe the last part I'll cover.
No, go for it. Keep going.
For sure. So the last part I'll cover is like real world application, which I know for those who are not in crypto, it feels really strange to call something real world, but it's just non-crypto native yield. So there's a lot of crypto native yield that is generated from from trading firms or traders in crypto borrowing to get leverage to trade somewhere else. So it's similar to like, me borrowing money from a protocol called Aave that brings more money in my positions to buy, let's say, options on another protocol. So all that money is still endogenous or sits within the crypto ecosystem, and you don't have an equivalent asset that's being reflected in quote unquote the real world or in more traditional finance that's not on the chain. When we talk about bringing into the blockchain real world financing opportunities, we're talking about things like private credit, which are which would be funded towards real like companies that are not crypto related, like a solar panel company or a CPG company, etc., that is using that capital for a productive business purpose. And so these businesses can leverage crypto as a source of funds, but they're not a crypto business at the end of the day. So it's actually bringing in new kind of assets that are not crypto native onto the blockchain. So the reason why we want to do all of this is because we believe in a future where the both sides of capital markets become a lot more efficient and a lot more transparent, where you don't have you know a bunch of different middlemen and administrative processes to manage this. When you have something that is just globally available, automated, you can actually provide a lot more opportunities for new investors as well as new borrowers or new people in need of capital to come together in a free market.
Yeah, that makes a lot of sense. And I think that's the kind of, it's the kind of vision mission that so many of us in crypto can really get behind. Sherry, you said so much stuff that's so interesting. I want to kind of go all the way back to the beginning there for a second, because I
Mhm.
was super interested in hearing about the team that you formed. It sounds like such an interesting team. You coming from sort of like the tech payment scale up place, and of course the like consumer interface kind of a space that the Singapore government is actually so good at. So I assume a lot of the people watching these early podcasts are going to be from Singapore, which is where our network is, and of course Sherry and I, our desks are next to each other when we're in the office. Um, but I hope that we have an international audience at some point, and if somebody from other countries gets to watch this, you should know that the Singapore government services uses technology so well. Like I can log in to my tax account with my phone and file my taxes in like 5 minutes.
Yeah.
Singapore has really mastered this process, and it's exciting that you have someone from that background on your team. And it's also exciting that you have the Burmese person on your team, because I was actually reading just recently. I wasn't expecting this to come up, but I was reading just recently how the Burmese resistance movement is officially using a stablecoin as their like
Yeah.
official currency. Can you
Yeah.
tell can
Yeah.
you, can you tell us a little bit about that? I'm sure you know.
Yeah, for sure. So there's I guess, a resistance group in Myanmar called the NUG, which runs counter to the current junta or the military government within Myanmar. And so, as I talked about earlier, when your opposition is owning the traditional money system, it becomes very difficult for you to raise funds for your cause if the opposition is the one controlling the flow of funds, right? So the NUG actually has started using USDT as their official currency because it's, I mean, permissionless, it's immutable. Like you can't go and freeze USDT, or at least the junta can't go and do that, right?
Yeah.
I will have to caution and say that centralized stablecoins can technically be frozen, but in the case of what the Myanmar government can do, they can't actually stop that. And so Myanmar is one of the many cases around the world where decoupling money from government has actually been extremely empowering for certain groups, right? I think, other use cases that I've heard of actually as well is in certain war-torn countries, refugees have actually been receiving funds in the form of USDT and stable coins as well. And so these are
Mm,
the kind of use cases that don't always get talked about because everyone likes to think about leverage trading and yields and all of that. But crypto has actually really had some humanitarian impact as well, because there's so many cases
yeah.
where, having money separated from the players in power is empowering to those who've been disenfranchised and gives them the mean to be able to actually improve their situation, and or fight back in the case of Myanmar.
Yeah, very cool. But I get the sense that you're more focused on sort of the commercial side, right? Like you want to be able
Yeah,
to, yeah. So
yeah,
tell us a
it's
little bit about that. Like, who is what's your sort of like prototypical use case as an
mhm.
end user for somebody benefiting from the Bluejay platform?
Yeah, yeah, of course. So I would say that there's two main users that we care about. It's our investors, our lenders per se, and then our borrowers. And so I can talk through the use cases and benefits for both sides. So on the investor or the lender side, and the reason why I'm classifying them as lenders because I want to make sure that you don't get that confused with like equity investors into Bluejay because that or the token holders of Blue because those are different. I'm talking about the people who are depositing and earning yield off of our fixed income platform, right? The one that has our stable coins. Now, the type of user here actually does not represent your typical crypto degen user, which has been the power user and the target user for probably 99% of DeFi apps. We have I guess, a classification that we call like Web 2.7 mass affluent user. And let me break this down on what this exactly means, right?
I love this. I'm so excited to hear about
Yeah, I'll
this.
describe it and then I'll give you some examples of like real people. So like a Web 3.0 user is like a degen user, right? Like it's somebody who like is, knows how to use Uniswap, knows how to use maybe some of the options protocols like Ribbon, is looking for 10x leverage. Like they're looking for kind of quick liquidity, instant liquidity, looking at DeFi as primarily a place for outsized asymmetric returns that can sometimes be like 100% plus APR. So they're probably not 100% of our target user because our product is a passive income investment platform, right? So we're going to give you 10%. We're going to give you 11% over a period of a year. But and that's good for some people, right? But it's not going to give you like you're not going to go to the moon with passive income strategies, right? Now the reason why we say Web 2.7 instead of Web 2 or 2.5 is that we're looking at users who have some exposure to crypto. Maybe they've bought ETH, BTC of the like before, but they may not necessarily be like the most native users. I mean, they're like my friends that work at Web 2 startups and maybe use two protocols during the bull market. But they yeah, don't aren't necessarily a regular user of crypto. Now, you may ask like why are these users interested in a platform like Bluejay, which is in crypto, if they are not typically the most active investors in crypto? And it's because what we want to provide for them is a level of access to a type of financial instrument that they cannot get in the traditional world. If you kind of know, so we actually talked to hundreds of people about their personal finance to kind of learn about this. But you may, even in the most privileged markets like Singapore and the US, as a like, I guess as a like somewhat high earner, but maybe not like, a private banker target segment yet user, you actually don't have the world in terms of the assets that you have access to. You have ETFs, you may have REITs, you may have real estate, stocks, fixed deposit accounts, maybe like treasury bonds, right? But like most people don't know that family offices and large institutions actually have like access to things like private credit funds that can give them 12% annually. So these are like market beating returns that are so exclusive that most people don't even know about them. And even if they know about them, they like don't have 200K lying around to be able to LP into a fund or be able to access it. But these are exactly the kind of instruments that can kind of help you get above a risk-free level of return for your money without taking a huge level of risk or dealing with market volatility that still comes with ETFs, even though they market themselves as like a steady 8 to 12% every year. So we're looking for people who are looking to solve this part of their investment portfolio that's just not available to them today. And without going into the full details of it, there are some historical reasons why fixed income, especially high yield ones, are so exclusive, even though stocks, equity, all of that, pretty much anybody with a Robinhood account could be able to buy. So we want to make this much, much more accessible for our users who belong in this Web 2.7, mass affluent kind of user category.
Okay.
So that's,
You want to talk about go ahead, tell us about the other side, then I have some questions.
yeah, yeah, sure. I mean, we can go through the questions now and then I can jump to the other side. Let me know
Sure.
what's better.
This okay. It might be the same answer, but I guess I do want to ask about how the yield is generated, and
Hmm.
I guess maybe more specifically, you know, there crypto yield. You know, there's been some issues with it in the last like year in particular. What are you doing? I mean, you must be sort of facing this, and like, so how do you sort of address the questions about like, oh, crypto yield product? How are you
Yeah,
different
yeah,
from, yeah.
yeah, absolutely. Have you ever lent money to like a business or I don't know, a friend that needed it to, I don't know, I guess, have you ever lent to a friend who has a business or lent to a business in general?
I don't personally no, I don't think so.
Okay, no
I mean,
worries.
I'm not sure. I guess I've lent to my own businesses before.
Yeah. How,
Yeah,
sure. So let's just take the example of your businesses. How does lending
sure.
to your own businesses generate yield?
Well, the business has to make money and then it can pay me back.
Exactly. It makes revenue, right? I mean,
Right.
that's the whole point of lending. Money today that you give to someone is worth more tomorrow because you're able to transform that into productive capital, right? Me lending to, let's say, you know, I'm trying to think of a good example here. So, if I'm lending to a solar panel company, right, that needs to borrow for setting up, let's say, new panels in like a Manila city, right? Solar panels actually, I mean, they make money in a kind of recurring way because people are just paying their utility bills, right? So then you make revenue from after you construct that and it pays itself back at some point, otherwise you don't have a business, and part of that revenue then is paid back in interest to the original lender. That's just how lending works in the real world. That's actually how lending works for us too. The only difference is that the fundraising vehicle is in stable coins on chain, but that yield is basically generated from business revenue.
Got it. So what happens to my principal if the business that my money went to fails?
You don't get it back. I mean, let me maybe just I'll clarify. It depends on the recourse methods, right? Um, some so that's when a loan goes into a default state. And I'll call it a hard default because sometimes there's soft defaults, which are just late payments, and eventually you get your money back. But let's just say like business goes under, right? Now, a lot of the loans that you have would typically be secured or collateralized by something, right? That is, I mean, why credit is called credit. It means you kind of have something put up to make you be deemed credit worthy in the absence of like really having that money today. And so you can put up collateral in the form of property or real estate. In some parts of Southeast Asia, it's actually personal collateral, which is fairly common, like something that you own personally, but you're collateralizing it for your business. But it can come in the form of a lot of different types, right? And so, depending on the fine print of the deal agreement, there could be a recourse process where some of that collateral is sold or some way liquidated or dealt with so that there's some portion that is paid back to the lenders. Now, in unsecured lending, completely 100% unsecured, right? I mean, the worst outcome that you get is you just don't get your money back, right? So there's always inherent risks for investments. Anytime that you want to grow your money in any way, shape, or form, there is no such thing as risk free. There is always risk. it's up to you as an investor to determine what types of risk do you understand how to evaluate and what types of risk you are able to actually handle, right? And everyone should bankroll their investments, right? You should never put 100% in Bluejay Earn. If you do that, I will tell you, this is not financial advice, but please don't do that, right? Like for
Yeah.
my own product, because you can always lose 100% of your capital.
Yeah.
That's the reality.
No, and I appreciate and respect you saying this and putting it that way because I think one of the mistakes that the sort of last generation of crypto yield products made was really being very shady about this, right? Like they were all pretty much, promising to be risk free. Should have everybody on the inside know that they were just running the basis trade and they would only be able to pay out these yields if
Yeah.
there was convexity in the yield curve. But
Yeah. Yeah.
yeah, so I guess, but going back to your situation again, um, I guess I wonder like if I'm expecting a 10% yield, in order for somebody to pay me a 10% yield, they not only have to be profitable, but they have to be in a position where they can't get access to cheaper capital. So this tells me that this is a somewhat risky sort of proposition. So what what does Bluejay do? To what kind of information does Bluejay provide for
Mm.
me to be able to properly assess the sort of risk reward, metrics
Yeah.
here?
Yeah. So we have a data room for every single deal that we bring. And let me tell you, I've looked at the data rooms of other players. We have far more information in them. It's far more transparent than what I've seen out there. There's sometimes information like a DCM or a capital markets deck where you can actually just see company information, some financials, the structure of the loan, previous performance as well, that can provide you the information so you can independently decide like if it fits your risk reward criteria for an investment. So we do provide that kind of information. Now, I do want to answer your question about like, how like why do they go to alternative lenders? Why how can people pay back the 10%, things like that? It's actually not. So if only profitable businesses borrowed money, then you would have very few people borrowing money ever, right? Because like in startups, like very few people are profitable. Now they can have cash flow within, they have short-term cash flow that can help them pay back, the loan. And that's I mean, that'll basically show that they have the ability to pay back. But having profitability as a criteria would make it very, very hard to lend to anybody. I mean, you've got large companies that aren't profitable yet. Now, as for the question around like, is there some adverse selection when it comes to companies that are willing to pay a higher interest rate and are going to alternative lenders instead of banks? And my answer to that is there's always going to be, I think, some companies that have that higher risk profile and are turned away from the banks because they're not a great business, right? But there's so many that get turned away, even if they are a good business. And that's because, I mean, banks are not incentivized to lend to smaller players, right? Like, let's say you are working at a bank, right? Your goal is like maybe the annual loan book size, right? Would you spend your time on a $1 to $5 million loan or $100 million loan? $100 million loan to like Coca-Cola or a well-known company versus, 10 or 20 like SMEs that are reputable, but they have a smaller loan amount, right? You have finite time. You're going to probably lend to the more established player with a larger loan size, right? Now, the problem is when you have this at a mass scale, you're basically not allowing much long tail access to all these businesses that can have very legitimate revenue sources, operations, just need the capital to expand, but just are below the threshold that may be interesting to banks. The other blocker oftentimes is just, I mean, I don't want to say it this way, but biases in what you lend to. Let me tell you, real estate gets the best rates in Singapore. Like it's to a point where it doesn't even make sense to bring these kind of things into crypto if you were to ask me, because they're getting 3%, 4% from a bank. I mean, if I were to provide that on Bluejay, I mean, someone could just say, I can get a better rate from just chucking my money in a fixed deposit account with a bank. Like, why would I use Bluejay? And I'll tell you, like, that doesn't make sense to have those on there because they're getting such sweet rates from the banks because they understand real estate, right? It's just such a like very traditional asset class. It's like, you know, your grandparents and your grandparents' grandparents and your grandparents' grandparents' grandparents like invested in it. But when it comes to like tech risk, right? Like how it's a lot harder for, you know, somebody working on a bank to understand how to underwrite ESG companies, right? Who have maybe different business models or fintechs, right? But doesn't mean these are not good businesses. It's just it takes a little bit of a longer due diligence process, perhaps, for them to understand. And it might not necessarily have maybe the, you know, the same kind of understanding of the space as maybe a Silicon Valley VC, right? So there's another like there's a knowledge gap as well that often precludes these companies from getting funding from their traditional outlets, as well as, I mean, attractive enough interest rates. So there are always going to be companies that can go to alternative lending platforms because they just can't get it from traditional institutions because their business is not viable. That can definitely be there, right? But what we make sure we do is that we vet every single opportunity that comes to us, to make sure that, you know, we are on the better side of things, that really it's truly the what good but overlooked businesses that need capital and financing, to bring those onto the platform.
I think the mistake that the previous generation of, you know, sort of crypto yield businesses did was really promote it as like this like magical yield that comes out of nowhere. You never would have heard some of these folks say that you could lose your principal, right? And I think it's that lack of transparency that really got a lot of people hurt here, because I think most people are okay with accepting some level of risk, especially, you know, if you know like what your money's going towards. It could even be like something that you're excited, you know, about.
One of the things that is just so incredibly important to the ethos of our company is integrity, even if it comes at the cost of short-term hyper growth. And what I mean by this is you can, of course, during a bull market, gain more users if you promise them the world, right? You give them 20% risk-free bank savings. People are going to like eat that stuff up, right? You're going to get tons of users that come in because it just sounds too good to be true. But those things never last because those yields are not sustainable, and you can't do that forever. And so, what's really important for us is to be a player with strong integrity, right? That, you know, we are upfront and transparent about the risks. We target users that are not the ones that don't have the capability of doing that due diligence, right? Like I know some companies that are crypto yield companies that actually target specifically users that are less financially literate because they just see the 10% or they see the 15% and they just ape in, right, without really knowing what they're doing. And that's a deliberate thing. Like that's, we're avoiding that. I mean, we're trying to talk to people that we are pretty certain at least know how to bankroll manage their risk and understand how to use what we're doing, right? Even if it's like, you know, a smaller number of users to start with and just going after, you know, mass retail, right? But that is really important to us because, I mean, we want to build like a lasting business, right? Not just you know, a scheme or something that you can make a lot of money off of in a short period of time and leave, right? That's not at all, I mean, why, you know, I left Google to work on something, not why my co-founder left GovTech to do this, and to certainly not, you know, the motivation of my, you know, Burmese co-founder who knows what it's like to be rugged by the government, and he definitely doesn't want to do it to other people. So we care about that a lot.
All right, Sherry, thank you so much. It's been amazing to learn so much about you. Is there anything else that you want people to know about you or about Bluejay?
No, I think we covered quite a bit today, Lawrence. I just appreciate the opportunity to go on your podcast once again.
Of course. Thank you so much for being with us. Take care. All right. Well, there you have it. I hope that you enjoyed this conversation as much as I did. Please check us out on xd.academy. We're putting new content up all the time. Look out for our community coming soon. We're going to want to see you in there for sure. And we will definitely look forward to catching you next time.